Yo, what's up, you guys? Welcome back to another weekly market breakdown. We will be taking a look at all of these DXY pairs from both a technical and a fundamental perspective. Now, if you enjoy the content, please do consider smashing that thumbs up button to help the video grow as well. Now, without any further ado, let's jump straight into it. But before we get there, let's go and look at some of the questions that we have received. Hope you guys are having a beautiful weekend. Let's go through some of the questions here quickly. Where did I end the last time? Thanks for the bro. This is a London-based firm. Yes, I actually went to go and read about it. There we go. There we go. That's the last question I asked. Okay, Mr. TD Noob is saying, I never passed an FTMO before, for that matter, but I was just wondering, say you get a profit split payout, what happens after that? Do the challenge end, or can you continue to grow it? Because I hear some people speaking about scaling up all the way to 1 million or 400k. Please, can you give me some clarity on this? What happens after you pass the challenge? Are you done, or can you continue? The short answer is you can continue, but the way has given you a good explanation for that, so thank you. Next one over here is Mr. Lingham is saying, hey Rolio, do you perhaps pass ACG Markets? No, I don't offer that services at the moment. That will return at the end of October with some new exciting services that I will be offering to the public as well. Mr. Raymond again is saying ACG Markets I'm talking about is in London. I actually checked them out, so I was wrong on my side. The way you're saying, afternoon, does the CPI have an impact on the market long term or when the news is released? Also, thank you for answering my question. Appreciate it, and may the unmerited favor of God be upon your life. Thank you so much for that. So the first thing is that the CPI, depending on which way you look at it, so you'll notice that when the CPI gets released, they look at it month over month and year over year. Long-term investors, they look at it year over year because they've got a long portfolio that they work with. But me, I look at it month over month because I trade it week over week. But ultimately, long-term, you want to be looking at these numbers because you can see year over year, they're sitting at 3.7, but month over month, it's sitting at 0.3%. And this is what I basically look at as opposed to the year over year. But if you want to look at the long-term effect, you look at the CPI for year over year. One more question: if CPI increases by maybe 1%, will it be negative for the currency due to things getting more expensive? So the way CPI affects the market is that when you have a high CPI reading by 1%, that means inflation is increasing. It means that people are spending more, right? Consumer spending index. So what happens then is that the Fed's job is to make sure that they cool down the consumer spending, and the way they do that is they hike interest rates. So when the inflation increases in value, that basically means that because the Feds are more likely to increase interest rates to bring inflation down, higher interest rates make the dollar get stronger because high interest rates attracts investors to the index. So the more investors want to go to the index to invest because they will get a higher return because of the higher interest rate. Kenneth Mbale saying, as always, very informative. Thank you, my good friend. Gambling is when you don't use a Bloomberg terminal. Thank you, sir. Thank you. You made it so simple. You are very welcome. Thank you for the information. So if you're in South Africa, which account can one use for payout? I would say you can use Bitcoin or you can use Wise. You just link your bank account to Wise, and they'll pay you within 7 days. Not within 5 business working days. Ute is saying, what is your real Instagram handle? This is basically my Instagram. This one that I use. This is the one. There we go. That is mine. With that, only have 922 followers. The only difference is that is actual followers, so you can actually go and DM them. Any case, guys, last week we had a lot of news, but if you think that's bad, we've got even more crazy news coming this week. So obviously based off the higher size CPI reading, the high CPI reading and the Federal Reserve coming through with the interest rate decision, there is definitely an expectation for the Feds to hike the interest rates. However, according to the Dow Jones' estimate, the Feds is less likely to hike interest rates, and they are steady to keep it at a 5.50 basis. So next week, Wednesday, we've got the FOMC, which is the Federal Reserve funds rate, or the Fed's interest rate. We've got the Fed's economic projections, where they basically say where they see the economy going in the future. The FOMC will then release a statement about about how things has been going. And then there will be a conference where people is able to ask Powell, hey, but when are you going to hire Rolio Jack to come on CNBC? And then he's going to say, don't worry, we're waiting for... So then they'll be able to interact with him. We've got the Purchasing Managers Index. We've got the Purchasing Managers Index for both manufacturing and services there coming through as well. But my eyes going to be on the interest rate decision. I do expect the Feds to hike the interest rates because there's still no signs of inflation cooling down. If you've been following my breakdowns religiously, you'd have known that this move has happened exactly as anticipated, and without even spending any more time, a break above a previous resistance back to tested as support, and once again the continuation is going to be expecting. Guys, if you've watched this video on this currencies, right, if you've watched the video breakdown, if you go back, I don't want to now blow my own horn or anything, right, but if you go back and you watch all of these breakdowns, everything, all of these ones, okay, you'll see that most of them, if not all of them, was right. I know there was one video where it was not right, but I actually came back to give you guys an update. But this is what I do expect to see going into the new week. I do expect the market to continue higher, and then once the Fed gives us that interest rate decision, and then I expect the DXY to move higher, to go back to where it was before. But for now, I do expect this move to take place. Next up, we've got Euro USD. Euro USD basically reached the target, and from here it is now the target will now be adjusted for the market to continue lower. We had a clear break below a very important structural level over here. Market actually came back, tested it. Market broke below support, and support came back, tested it as resistance. Here we had this level of support that got broken. Market came back, tested it as resistance. I do expect a further dump of this market to continue lower as well. Now, that is where we're going to see, but just to be safe, I will probably trade it until there. Next up, we've got GBP USD as well. Target also reached. I hope you guys are getting into this stuff. Free stuff. I hope you guys are getting into this stuff, because it will be sad if most of you are spending a lot of time trying to analyze the market, and then you're still wrong, where you could have just followed these things and easy. This is a premium subscription, a golden spoon. It's not really a golden spoon. A trader. What is a trader? A trader is simply someone that is able to buy these panado for 10 rand and then sell it for 50 rand. That is a trader. They're not someone that stands on Instagram and show guns and money and tell people how much money he made, and then get a clown to then repost what he said, and to make people who actually does the job make even look worse. It's not a trader. A trader is someone who trades the market, and then you get a salesperson. You've seen a lot of those. This market is also deemed to continue lower there, because I do expect that pullback, but we could potentially see a impulse correction. We could potentially see a pullback take place here. I would say be reactive and just be careful with this, because the ECB also hiked interest rates, which we could potentially see that get stronger. Next up, we've got USD CAD. USD CAD just found support. I do expect a pullback. We've got a gap that still needs to be filled. Got a massive impulse. So after an impulse, you expect a correction. And if you take this Fibonacci from the high to the low, we can see that we do have the potential of the 61.8 that's lining up perfectly with this structure. Now you might be thinking that, but why is USD CAD getting weaker if the dollar is getting stronger? And that's because the price of oil is directly correlated with CAD. So CAD, when the price of oil increases, the CAD also increases in value as well. Now, you do expect the index to increase and then fall down till here. In doing so, will the market also print what's known as a head and shoulders pattern, which is considered a bearish pattern from a technical perspective. Next up, we've got AUDUSD. AUDUSD is also deemed to go lower. This is also directly correlated with the stock market, if I do stand correct. But I do expect this market also to continue lower after it failed to break above that previous level there as well. Next up, we've got USD/JPY. The buyer still stands. We've got new structure that we are faced with that the market could potentially break above, but you can see how the price action had played out. Market printed resistance, broke above that, tested it. I do expect a break above that there, boom, and then continue all the way to these highs over here, and then from there, that's what they do. Now I'll give you a quick example of what big institutions are doing. They buy the price high, make it look like it's going down, and then they just buy it more higher. Guys, that is it from my side. I'll see you guys in tomorrow's breakdown for indices, precious metals, as well as commodities. Thank you for your time, and as always, cheers for the years.